All right, good morning, everyone. Let's kick it off. All right, after a 4-day weekend, there's actually quite a hell of a lot that's happened since we closed on Thursday. Obviously, the big thing was the non-farm payroll number, which came on Friday. We were expecting an increase of 245,000 jobs. Came in at a lowly 126,000. If I'm not mistaken, it's the first sub 200,000 print in about a year and a half. And so there was obviously a lot of nervousness around that when that happened. You know, the S&P sold off 20 points. We only had a 2-hour session, 30-minute or an hour session after the non-farm payroll came out, because remember, it came out on Good Friday. CME markets on the S&P closed very soon after that, and so we closed very quickly after that, and so the market only had a very short time to be able to digest it. Obviously, it digested it negatively. Yesterday, it came out. You saw we opened up in the States. Pre-market, we sat there. We were trading down, roughly 15 points for the first, however. For the first part of the market, of the pre-market session. From there, we very quickly made a spurt right there into the open and really traded higher for most of the day. You can see there we backed off the highs from about maybe 2 p.m., but more or less really starting to, made a big reversal, almost 40 points off of the lows from a couple of days prior. So I think very big, a good reversal out of the States. I don't know how well attended it was in terms of the volume, that sort of thing, but I think very, very important. Obviously, markets coming in looking bullish this morning. We had a reversal in some of the commodities and mining, precious metals and that sort of thing. And then yesterday we had services PMI numbers, which came out in the States and actually beat expectations. So we've seen on the back of that, we saw a big boost up in yields after we saw a fall in yields on Friday. We saw a big boost up in yields yesterday, and I think that we could see. To me right now, the picture and the 10-year is confusing, because yesterday's bounce and yields were quite spectacular relative to just seeing PMI numbers. The dollar's made a big move, obviously, to the downside after Friday's numbers. Just have to see if this thing can continue from here. But interesting nonetheless. I think that it'll be interesting to see how we play out in the next couple of sessions if this rally can continue. All right, looking at the Asian session overnight, we did see a little bit of follow-through. We saw the Shanghai, which really had a power session. I think that the market's probably liking the formation of this Asian bank and Asian lending group, or whatever the piece that they're putting together is. It's obviously kind of seems to be a big boat of support for China and all things Asia, and so therefore I think China's taking a little bit of a boost out of it. The Hang Seng is actually closed today. Not only is it closed today, it was also closed yesterday. So whatever numbers that we're seeing there, I think are actually not there. And you can see Australia. Australia actually fell down a bit. It was up about 1.25%. The market was totally expecting a rate cut coming out today. This is 2 times in a row where I think he's surprised the market without cutting interest rates, and which is actually a surprise to me as well, because they're so closely attached to China. Another economy has come under pressure, so they pulled back off to the top a little bit. I'm actually surprised they didn't fall more than they did, but it pulled in the reins a little bit from a well over 1% rally earlier this morning. So definitely get a little bit of follow through off of the way the States traded after the non-farm payroll, which I think is a bullish thing. All right. This chart of interest on the day is showing consumer import prices relative to the CPI, and I think what's important here is that there's a analyst from Bank of America Merrill Lynch that's basically saying that I think this is the most important inflation indicator, that the Fed's not even looking at it. And what they're saying is that this is actually hitting deflationary levels, and it's going to get worse. the chances are for this to move more to the downside than to the upside from here. So, and I tend to agree with him. I think that it's going to be really, really hard to get any inflation out of the States because, well, while we don't import everything, we import a hell of a lot, and prices worldwide just, there's no inflation really anywhere. So, I think that is going to be really difficult to get a big bulk of widespread inflation in the States. So bottom line is the Fed's looking lower for longer, as we would have seen on Friday's non-farm payroll anyway. All right, no corporate action really to speak of today. In terms of market data, like we said, we had Australian Reserve Bank, which left rates unchanged. We've got we have German PMI numbers which come out just before 10. We've got European PMI numbers at 10, and then we've got UK PMI numbers at 10:30. All right, let's get into the maps. All right, first thing we're going to look at is the U.S. 10-year. So here you're seeing yesterday we bounced back up to 100 to 190 on yields. What's interesting, and I only noticed it this morning, I guess I would draw it like that, is we're making definitely have a bit of a head and shoulder set up here in the 10-year, kind of sloping down to the right. But bottom line is we've come up to test the neckline after dropping it yesterday. I think 190 for the time being, maybe a bit of a line in the sand. And if we get back above that and can come back up and really test the 2% level, I think it'd be doing a hell of a job, especially after that non-farm payroll number. But we saw a complete implosion in yields down to 180 after the non-farm payroll number, and then you saw us bounce back right up here to 190 just on a PMI number and not a whole lot else. So to me it's a little bit confusing, and I find it. I'm surprised the dollar didn't rally more. I'm surprised the 10-year Treasury yields haven't fallen further. But it is what it is, and I think it's interesting to note, and maybe the market still thinks there is some sort of a chance of a near-term rate hike in the States, but the Fed futures market's starting to show you that there's no higher than 50% probability of raising interest rates until 2016 now. So this is, like I said, it's an interesting chart. It's going to be really interesting to see how this plays out. And I think it's going to be, as important as ever to really watch this one over the next few sessions to see where markets are going to take us. All right, next one. Let's have a look here at the light sweet crude. This is West Texas Intermediate light sweet crude. Sorry about that. I'm trying to get a line to draw here. That didn't work out. All right, so you can see here, we're actually making a bit of an inverse head and shoulder here. I'd like to say that this thing's broken out already by that chart, and you can see a little bit of an inverse head and shoulder, that being maybe a left shoulder. I mean, maybe weak on the shoulder here, but on the left shoulder, but definitely the pattern, I think, roughly there. Definitely looking like it's broken out a little bit. What I'd like to see is a close maybe above 52. If we did get a close above 52, I could see that as being some sort of confirmation. And in fact, I would go so far as to say we need to see a close maybe even above 53 to really see a true breakout from this consolidation, because we have been in this type of downward sloping sideways consolidation here at the moment. I think if we can get above any of the highs at this point, I think that would be our bullish point for West Texas. I think there was more than this, just a non-farm payroll number that got oil going on yesterday's session. I think a lot of it's having to do with Iran. A lot of people are thinking that this oil was going to come flooding back on the market, but I think they're saying it's going to take a considerably longer period of time before that supply is able to actually filter through, before all of the sanctions are opened up and that sort of story. So maybe a bit of a bullish surprise for oil markets. All right, Billiton. I think the mining stocks are going to be interesting today. I think they will definitely be in play to an extent. Obviously we saw the commodities prices bounce nicely yesterday, and so therefore we're going to probably see potential for some of these commodity stocks to have a big rebound today. Friday they really got hammered. Billiton's down 2.6% in London. On Thursday. In the States, obviously, overnight in Asia, obviously we had a nice bounce, and we saw physical commodities which traded really well. So I think that this is becoming interesting here, and we basically dropped the level. I would say that was the important level at 255 in Billiton. But it's not a convincing breakdown this morning. Obviously, I think you see it back above the 255 marker, or at least up and around that level. So we have to see how it plays out. See if we can get a close above 255 there today to kind of reverse that. Another one that was interesting, obviously interesting before the non-farm payroll number is on Thursday. So this is Amplats. Amplats came down after dropping this level, this little continuation or inverse cup and handle, whatever you want to call this. We bounced back up nicely to this level. Friday, we actually looked like we were trading through resistance here at one point, up north of 310, and we made a huge reversal. Not only did we make a reversal, we took out the closing lows in that same day. So it looked like we were getting ready to turn the corner and break through resistance. It was just a horrible failure into the close. This one's also going to be interesting. We had a big bump up in platinum yesterday, and platinum prices, gold shares traded well in the States. So we have to see how this is going to play out today. 310 for me is resistance. You can see there, if we get a close above 310, then I think this thing is kind of turning the corner the other way. If not, then I think that it could be some more downside to come out of Amplats. All right, the next one we'll look at is Goldfields, and I wanted to show this morning because obviously gold traded well overnight. To me, this is really setting up to be an inverse head and shoulder pattern here. We need to see it trade through 55. If we get through 55, I really think this thing's got a big target, probably as high as maybe 66. Which would be up close to the top end of this range up here. So just watch this one, on the next day or two. We're going to see it open up higher this morning on the back of the trade in the States. From what I understand, there is a big short interest out in the gold market right now. So I wouldn't be surprised to see a significant rally out of some of these gold shares. And the way that they've been trading, everybody sitting on the short side of gold because they thought the Fed was going to come in hike rates. You get kind of a total 180 in the expectation there. Could really potentially put a short squeeze in physical gold and therefore the shares. The last one I'm going to show is Mr. Price. You can see kind of breaking out in terms of closing highs. Not really. It's right there at that level. Call it 270. Was basically where previous closing highs were. We closed on Friday. I think that if we get above this, then I think we'll very quickly tack on a quick $30, maybe take us up all the way to 300, and Mr. Price would be quite spectacular. That's it for today, guys. Good luck out there.